Hi everyone and welcome to today's morning report on Thursday the 20th of August with me, Rich Pro Market Analyst. That's Handtech Markets. European stocks are under pressure again. That just comes as this continued weakness in commodity prices continues to drag market sentiment lower. But the big news overnight was the Fed meeting minutes released yesterday. The Fed sort of maintained more of a more of a dovish stance than the market had been anticipating, really. Suggestions that conditions for policy tightening had not yet been achieved, and it really does focus on the inflation data, and the inflation data yesterday was not very strong either at all. So it certainly suggests that now the sort of market is moving towards more feeling that September is not really necessarily going to happen, and that has had a big impact on certain asset classes. Certainly the Treasury yields have moved sharply lower on the back of that, trading towards the day lows, and they continue to remain under pressure again today. That has had an impact on the dollar. That dollar strength that we'd seen earlier this week reversed yesterday, sharply low, but it's slightly bouncing a little bit today. But with Treasury yields still down, I'm a little bit sceptical as to how that can continue. That's initial move that we've got today. But look at these commodity prices. Oil remains at a massive, remains in this massive downtrend. Copper as well. Copper, that's 24% from that May high to yesterday's close. So very, very strong downside moves in these markets, and that's having the impact on these equities. There was an initial slight rebound on equity markets in the US on the back of that dovish set of meeting minutes, but ultimately the S&P closed lower. Asian markets lower overnight, and the European markets continued to decline. These selling pressure on these European equity markets is getting a little bit nasty now. Certainly FTSE trading at the lowest since January, and it's not great at all. So what we do have to wait out for today is the retail sales for the UK initially at 9:30. Now that data, retail sales at 9:30. That data has been pretty strong in recent months, still holding up nicely. So that is a generally speaking, retail sales has been a positive for cable and sterling. Expectation at 4.3% on the year-on-year data. So that would on the adjusted numbers ex-fuel, and that would be considered to be a positive for cable. So that might be supportive today. Then into the afternoon, we've got the weekly jobless claims, 272, so basically in line with last week. Continuing to improve there on the labour market. But the big number of the day, interestingly, could be this Philly Fed data. We had at the beginning of the week, we had the Empire State Manufacturing, which gives an indication of how manufacturing is performing in New York. And Philly Fed data gives that New York data came in disappointing, actually. Massive decline, actually, and unexpected decline. And if this is reflected in the Philly Fed data as well today, that would put even more pressure, I think, on the Fed to not move in September. And I think the dollar would come under pressure, and we could see some further moves. So that, I think, is the bit of data that we need to watch out for today. That takes me on to my chart of the day, which is the Kiwi dollar today. Kiwi dollar had been in this big downtrend channel, but that now downtrend channel has basically flattened off, and we're now seeing a trading range forming, and that trading range continues to form sort of around the lows of sort of 65 figure, say. I mean, we had a couple of intraday dips below 65, but still 65 figure seems to be the low of that range. And it's sort of picking up, and you see these momentum indicators picking up. You're seeing the RSI trying to move out to a 3-month high. You're seeing the stochastics, interestingly, close to a 3-month high as well. So we're beginning to see this improvement, and I think, obviously, we're not going to call a rebound quite yet, because you've got this resistance overhead. Resistance comes in at 66.50 at the moment, which has been sort of the level that hasn't been able to breach for the last 3 weeks. But look at this, we've got the 21-day moving average, which had been the basis of resistance, has now sort of started to bottom out. So again, that is reflecting of this range play that we're trading in at the moment. Now, looking at the hourly chart as well, let me just zoom. Sorry, it's frozen. Let's try that again. Let me just zoom out on this hourly chart, and you can see here that 65.50 has been a basis of a pivot level on this chart for some time, actually. Pretty decent level, and again yesterday it came in as the base of support. So 65.50 is the support you need to look out for. If you continue to see the Kiwi trading above that, I think you're looking more positive. Look at these hourly moving averages trying to move higher. These momentum indicators are very much range bound still, though. The hourly RSI, for example, consistently goes towards 70 and hits the support at 30, so that is very much range bound indicative. So we're not sort of calling this breakout yet. Obviously we've got this 66.50 is the overhead resistance of the current move that we're seeing, and that is a big resistance that needs to be taken out, preferably on a closing basis. But at the moment, bearing in mind that we're trading above this level at 65.50, I think that the Kiwi is slightly on an improving tack. You've not really seen too much selling pressure coming through on this Kiwi in recent weeks, and I think that is indicative of this sort of suggestion that maybe the US is not going to be hiking in September. So anything that suggests that the US is not going to hike in September, I think the Kiwi will be benefiting quite positively on the back of that. So it is still moving in this range until you see a move above 66.50. You're not going to sort of move towards the range highs, which is sort of between 67.40 to 67.70 at the range highs, but you need that move above 66.50 to really start to sort of move towards those range highs. But I wish you good luck in your trading today on the Kiwi, and I will speak to you later.